Hi there, welcome to Kneppy Invest. One of the most important things we can do as investors is just to find ways where we can improve ourselves as investors. This is also true as human beings as well. And one of the things I've never had in my past as an investor is a checklist. Now, checklists in many other facets or many other professions are very important. If you're a pilot, you go through a checklist. I think even doctors go through checklists. When I'm at work, in the Weather Bureau, I actually do have a mental checklist. Even as an investor, I have a mental checklist, but I haven't written anything down when it comes to a checklist. Now, this is all changing now, and there is a main catalyst behind me developing a checklist that I will follow. And I'll talk about that in the next slide. So, this is the first video, sort of an introduction to my investing checklist. Now, I haven't developed this checklist right now, so it's not set in stone. I think it is a fluid process, but I am working my way towards that. So why am I right now developing an investing checklist? Not having a checklist actually has worked okay for me, but I think if I do have this checklist, I can become a better investor. I can get better returns. And this becomes even more important because recently I have gone part-time. And just like a few years ago, when I became debt free, my whole philosophy on life really shifted from thinking that money is more important than anything else to realizing time is more important than money. So, with time becoming more important than money and then going part time, I realized really enhancing my investing returns is going to be highly important. So, if I can increase my returns by a few percent, that will be significantly beneficial to me when I actually fully retire in about 20, 25 years from now. Now, also going part time, my risk appetite has shifted. As a worker, as a full time worker, I was way more willing to take risks. In fact, at times I was quite cavalier when it came to my investing decisions. That is changing. Instead of becoming a risk taker, I am becoming a little bit more risk averse. And this is actually quite natural as you get older, as you grow older, your risk appetite should change from becoming risk taking to risk averse. I'm not completely risk averse. I still will take risk, but it definitely, my risk is changing, or my appetite for risk is definitely changing. And this all comes to strategy and focus. As I mentioned before, at times I have been a little bit cavalier with my investing and I've just lacked that focus. I want to be focused. I want to have a strategy. And that's where the checklist comes in play. Now, deciding on what I'm going to include in my checklist, I came down to three attributes that I'm going to be using for every single company. I've called these three filters, and they are quality, value, and sentiment. Now, these three attributes are going to be, or the importance of these three attributes are going to be different depending on what the company is. For instance, there's many companies out there with zero revenue. And for spoiler purposes, any company that has zero revenue will be filtered out of my checklist immediately. I don't want to be holding any company that has zero revenue. That means I will not be holding any story stocks. But let's just say, for example, there is a company out there with zero revenue. So automatically it's a low quality company and you really can't value that company at all. It's really hard to know what the future cash flows are going to be for that particular company. So it all comes down to sentiment. Sentiment is highly important for story stocks. We're talking about brain chip. Most of those lithium companies that are in production are story stocks, and sentiment plays a massive role. But if you flip it around and start talking about high quality companies, so we're talking about companies with growing revenue, growing profits, no end in sight to the growth of that company. These are high quality companies, and sentiment is much less important. The value of those companies are mostly because of the growth in the company. At times, because of changes or shifts in the sentiment in the overall equity markets, you might see at times the value of those companies come down to really attractive levels, and possibly we're seeing that now. So the importance of these three attributes or filters is company dependent. And depending on that company, I will be either not ignoring some of these filters, but paying less attention to some of these filters, if that makes sense. Now, the first thing I had to do when developing this checklist is how I'm going to set this up. Is this going to be like a checklist you'll find a doctor or a pilot going through where you just go down the checklist and tick off the boxes? And if a company has ticked off all the boxes, that's the company I want to invest in. I think that could lead to problems and lead to me excluding companies that could be good investments. And maybe I will have no company that fits every single item on my checklist. At this point in time, I'm leaning towards a system where I give numbers for each item on the checklist. For instance, if a company has increasing gross margins, I might give that a 2 on my checklist, but the gross margins are either flat or going down, that's a 0, that sort of thing. And then I add up the checklist and get a number at the end. So this also includes value and sentiment. And then I just look at all the ranks of all the numbers of all the companies on the ASX and international exchanges and come up with the best 20 or 30 ideas and invest in those companies. It can be a very fluid system. These numbers or this checklist could change over time, and the top 20, 30 investments could change over time as well. So I haven't quite decided on this, but I am leaning towards a numbered system and probably call it a scoring system at this point in time. So I'm going to ignore value and sentiment right now. Just concentrate on quality. What are some of the things I'm talking about when I say a quality company? And the first thing I'm going to be looking at is revenue. And this is an absolute filter. So what I mean by that, this means any company that does not have revenue is automatically filtered out of my system. That means no longer will I invest in story stocks. So really no more brain chip. And that's the main thing I can think of right now. No more companies or mining companies. So no more exploring mining companies. I have invested in those in the past. No more lithium exploring companies. So revenue is an absolute filter. I need a company. I want to invest in a company that has revenue. So some of the other filters I have included here are not absolute filters. So if a company is not increasing their revenue per share or just revenue outright, that does not mean that's automatically going to be filtered out of my system, but that might just get a 0 instead of a 1 or a 2. So I am looking for companies that do have revenue growth, preferably revenue per share growth over a certain time period. So I'm looking at 3, 5, maybe even 10 years. And the only problem with that is I might be filtering out, not filtering out, but giving companies who have only been on the ASX for a few years a lower score than they probably should be. And that could be a good thing, because one of the things I am looking for is predictability in quality or the growth of a company. So another thing I'm going to be looking for is operating cash flow and free cash flow, preferably positive. But if a company is not positive when it comes to those two, they just might get a 0 instead of a 1 or 2. And I wanted to see operating cash flow and free cash flow growing. Shares on issue is really important. I don't want to see a company issuing shares willy-nilly. I have seen some companies issue so much shares that shares on issue have doubled, tripled, quadrupled over a 5-year period. I want to see preferably shares on issue flat over a 5-year period. Gross margins. Now, this is quite important. I want to see gross margins increasing through time, and dividends. It'd be really good to invest in a company that is growing their dividends consistently through time. Now to some financial strength metrics. Debt to equity, I would prefer that to be quite low. Haven't quite figured on a number there, say lower than 0.7 or lower than 0.5, something like that. Cash to debt, if a company has more cash than debt, that should get a higher ranking in my system. If a company has very little cash and a lot of debt, that should get a much lower ranking as well. Return on invested capital and weighted average cost of capital. This is something I'm working on right now. Haven't quite decided upon that. I would prefer return on invested capital to be greater than 10%. And I would prefer return on invested capital to be greater than the weighted average cost of capital as well. So those are two things I am looking at right now. Haven't decided upon exactly what path I'll be going down with those two metrics. Return on assets and return on equity, again, a percentage. Should return on equity be greater than 10%, 15%, 20%? Haven't quite decided upon that. I might only use one. Maybe I'll just concentrate on return on assets instead of return on equity. I will prefer to see equity increasing through time as well. That is definitely going to be on my checklist. And again, just like most of these other metrics, it's not going to be an absolute filter. If a company's equity hasn't increased over the past few years, that's not an absolute negative, but maybe that company only gets a 0. And earnings per share growth. You notice I haven't mentioned anything about profits here, net profit after tax. And this is sort of my profit after tax proxy. And I would prefer to see earnings per share grow through time. So for instance, a company's profit could grow through time, but if shares on issue is growing at a greater rate than the profits, that means earnings per share is actually falling. That's why I'm going to be concentrating on earnings per share instead of profit. These are some of the things, some of the metrics I am going to be looking at when it comes to quality. I don't think there's going to be anything I'm going to include other than what I've already provided in this video. There might be something that might catch my eye, and this will be fluid. So if I do find some research that shows that some other metric is really useful depending or to those are some of the metrics I am looking at to include in my quality attribute or quality filter. At this point in time, I am willing to change this checklist. If I do find research out there that shows that a particular metric is really important to determining the quality or the value of a company. So I want this checklist to be fluid, to be able to adapt to the changing world. There is potential that some of these particular metrics become less important through time. So I haven't even mentioned something like annual recurring revenue for SaaS companies. Something like that could become more important through time. And that's when I might be more willing to include those metrics when it comes to the quality of a company. So that's all I have for this investing checklist part 1 intro. If you do have any thoughts on my checklist at this point in time, I'd love to hear your opinion. If you think I should include something else in my checklist, I'd love to hear your opinion. If you have any thoughts about how I'm going to set this checklist up, should it just be a tick by tick by tick sort of setup, or should it be a scoring system, something like that? I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.